What's up, guys? David DeSell here, your host of the Business with the Boys podcast. And in today's episode, Landon and I had an opportunity to sit down with not only a client of mine, but a good friend of mine. We've been working together for the last 6 months. We've probably known each other for a year or so, longer than that, when he was on my other podcast, the Model FA podcast. And in today's episode, we spent some time with Gerry learning about his backstory. He is a financial advisor and an ESOP specialist. And for those of you who are unfamiliar with the term ESOP, when you go to exit your business, there is a way in which you can structure that exit to where not only do you not pay taxes in that transaction, but you also have an opportunity to empower your employees to be owners in the business. So we go deep into that topic. He has worked with some notable companies, helping them structure their ESOP plan. And Gerry is just a good guy in general. You're really, really going to enjoy this episode. So without further ado, let's go ahead, dive in, and learn how to save on taxes when you sell your business with Gerry Spitzer.
Whoa. Who knew I would make it this far? They hated, they never believe me. Yeah, I would never drop the ball. I know I make it look easy. Yeah. Mayweather with the defense. I don't care what a critic got to say. I got.
Well, Gerry, we've known each other, I think, well over a year since we first met, and we've had the opportunity to not only do some work together, but also I've met you a couple times in person now, and I'd like to believe, and do not correct me if I'm wrong, that we've also become friends.
I would agree. I would agree. I enjoy your sense of humor, David, and I know you can get teased, so it's all good.
It's funny when my wife Kennedy, when I see her after I get my day started, I usually go up to her and say, "You want to hear my joke of the day that I'm starting all my meetings with?" Because I usually start with some sort of joke at the beginning of every meeting. So I'm glad someone
The good news
appreciates.
is, Gerry, he's got the dad jokes already out of the way for when the baby gets here.
Yeah.
So, yeah.
Well, I was just about to say, I'm glad that someone at least is saying that they like my jokes, because Kennedy just rolls her eyes when I tell her the joke of the day. So appreciate that vote of confidence, Gerry.
Yeah, and don't feel bad. I've been married for a long time, and my wife still doesn't laugh at my jokes. So but I still try. I still try.
That's all
I'm
we can
glad
do.
to know that doesn't get better over time. Thanks.
Oh man. Well, I've been excited to have you on the show, Gerry, and for everyone tuning in. Gerry is a financial advisor, and he specializes in ESOP planning for business owners. And we're going to unpack that quite a bit today. So for those of you who are tuning in that are considering exiting your company at some point, you're most certainly going to want to stay for this entire episode, because Gerry's going to share some creative ways that you can save, if not eliminate, taxes completely, upon the sale of your business. But before we get into the nitty gritty topic of the day, Gerry, give us a background as it relates to, your working career. What'd you do fresh out of school, and bring us up to what you're doing today.
Oh, great. Well, thanks for having me. I appreciate it, and I look forward to hanging with you guys today. Grew up upstate New York, and ended up going to a state school in New York called Binghamton, and did not want to major in accounting, but my father convinced me that I needed to get a job out of college, and accounting was the best route to go. So I suffered through an accounting major at Binghamton, moved to New York City, joined PricewaterhouseCoopers, and lived with a bunch of buddies like everybody does right after college. And, I had my few years experience at PwC, passed my CPA, and then I realized that the accounting life and working my way up in an accounting firm was not my bag. So decided to take a look into sales, and I like people. I like talking to everybody, and my wife is always harassing me for talking to everybody. So I constantly chatting it up with people. It doesn't bother me. I like people. So I was like, maybe I'll try sales. So I basically took a stab at selling computer equipment back in the early 90s when the computer era was really just starting up, and realized it was a lot of fun calling on large corporations that were buying multiple computer equipment and printers and PCs and networking and all that. And, quickly was able to make a living, stay in New York, because that was my goal, is to make enough money to be able to pay my rent and go out at night and have a few drinks. And basically really enjoyed that part of it, the challenge of the computer industry. So did that for a few years, and it was fun. And then I realized I really needed to choose a career path. So I basically looked at taking a pretty major pay cut and went to Merrill Lynch in the training program and joined that training program in my mid late 20s, and really went through that program and met my partner, who's still my partner today, over 30 years in the training program at Merrill Lynch. And we kind of hit it off. We had a third partner back at the time, and we basically started calling on large corporations on retirement plans. It's kind of come full circle in talking to, companies now middle market about ESOPs and exit planning and things. So basically, the way into the business was through Merrill Lynch, and we had a great term at Merrill Lynch. And then we moved on from Merrill Lynch when the basically the vibe at Merrill Lynch changed quite a bit after the Bank of America takeover at the financial crisis in 2008 and 9. So we decided to look around at what else was out there, and we chose UBS, and we went over to UBS at the time. That was our first move after 20 years in the business. And then we basically said at UBS, we really dove into the business owner marketplace there. And UBS was a big proponent of privately held businesses. So we really dove in and talked about retirement plans and exit planning there. And we did it for our whole stretch at UBS. And then 3.5 years ago, we went independent into the Sanctuary platform. And we now custody everything with Charles Schwab. And it's just been a tremendous experience for us. And it was a little bit like, there's nothing wrong with the brokerage world, but it was a little bit like,
there's a lot wrong with the brokerage world, Gerry. Don't lie.
Yeah, and well, you're about to hear it, Landon. You're in jail for so long, you start believing that the food is good, and then until you leave jail, and then you realize the food was terrible, and there's a lot of choices. So it's been a great experience for the last 3-4 years being independent.
Well said.
You made a comment about going to school and majoring in accounting, and it made me think back to when I was in college. I intended to double major in finance and accounting, and I took my first accounting class, and I was like, hell no, and I dropped that major immediately. So your dad must have had quite a bit of influence over you for you to tough it out for as long as you did. But it leads me to a follow-up question that I feel like a lot of folks struggle with, a little bit of an identity crisis, particularly younger folks who went to school for something, whatever that something is, and they either have an idea or an opportunity totally unrelated to what they went to school for. Maybe they lack a little bit of confidence, even though they have quite a bit of excitement about that idea or that opportunity. So my question to you is, someone with an accounting background, someone who went as far as to work over at PwC and then get into something totally different, computer sales and whatnot, which that was probably back when the computers were delivered on flatbeds. But that's besides the point, Gerry.
Are you trying to say something?
Yeah.
But what was that like taking a total 180 from how you identified yourself as through college and early on in your career as an accountant to ultimately getting into sales? What was that mental shift like?
Well, I mean, I think my father convinced me that the credibility factor is high in accounting, and that from having a basis of business and understanding accounting, you can really go any path from there to working at a privately held company, to an accounting firm, to sales, anything, understand the backbone of business, which is accounting, as a major was a tremendous thing to do. I feel like I suffered because I didn't really enjoy my major like a lot of people enjoy their majors. I kind of went through it. I understood it, and I realized that it was a necessity, but it let you go in any direction you want to go. But I will say also, even without being an accounting major, when you talk to younger people about their journey of finding a profession that they're really passionate about and really enjoy, you're going to make 2 or 3 or 4 errors along the way. You're going to take paths. The path's not going to lead to where you want to go, and you have to be able to shift to a different path. And it's all about taking risk. It's like, trying to convince younger people to take some risk and say, look, take a chance on this job. And just like I tell my kids and any other younger people that want advice, you're going to have to take some risk, take a chance, take a shot at this. If you absolutely hate this job, you go out and look for another one, and you'll find another one. And you're never going to know what path is going to be the path, because I remember being in computer sales, I actually understood that business and the hardware and the mechanics and actually the stocks in that space quite well. And I remember interviewing at Goldman Sachs for an institutional sales position. And that would have paid remarkably better than the training program salary at Merrill Lynch. And I remember interviewing there, and they were very impressed with my computer background and knowledge. And they really wanted to hire me as an entry-level institutional salesperson. And a buddy of mine connected me with somebody else in institutional sales. And I had a chat with them. And basically they said, this is good for 3 to 5 years. Then you're going to burn yourself out. You're going to make a lot of money, but you're going to have to find something else to do in 3 to 5 years. That really made me think, let me take the journey with Merrill Lynch. I'm going to take a major hit on my pay, but I'm really going to dedicate myself to understanding financial planning and working with individuals and families and business owners. And I took a shot at that, and that turned out to be a better long-term play. But at the time, if I didn't talk to that one person and got the advice, you don't know where your path's going to take you. So the journey everyone takes, everyone takes is impossible to know.
I bet that was the last time Goldman put that guy in front of a potential candidate.
Probably was. And I think it was an off the record conversation, if I remember it, but
No, so it's funny, you talk about your dad telling you to go into accounting, and you say young kids that want to get advice. My daughter definitely doesn't want my advice at 13 years old, but I have told her if she is smart like her dear old dad thinks she is, she would go and get her accounting degree for the very reasons you just mentioned, right? And you probably know it as well as I do, Gerry, being in the business. It's just so hard these days to find a proactive tax planning accountant, right? They all just want to be so reactive and just basically be tax preparers and filers that I'm like, you could make an absolute killing and a shitload of impact on people and business owners if you go get your accounting degree, understand business, and run a proactive tax planning firm.
100% agree. And there's such a lack of people going into accounting right now for young
terrifying.
people. Because everybody, I think one of the reasons is that, people know that if they major in finance, they think they're going to make more money. But ultimately, where you find your passion is going to end up being where you make the money. You don't worry about money in the early years. You find something you're passionate about, and you're going to make a lot of money in your passion.
And that industry is so archaic in their thinking as far as getting paid on tax returns and everything else, right? If they were, again, smart, which I know a ton of very smart accountants, it's like, why not change your thinking and do some good tax planning and just charge for a fee for the service, right? Like,
yeah,
people, myself included, I'm sure David included, right? We would pay a retainer for a client or a CPA to meet with us 4 times a year to just say, hey, where are we at? Here's what we need to be thinking about, and implement. Instead, it's a great opportunity for myself because we're doing a lot of that tax planning on the advisor side of things, and then telling the accountant to, do their damn job basically. And it's mind blowing. The clients that say to me all the time, well, can I just fire the accountant now? It's like, no, because I need them to file the taxes. But they're like, well, they're not doing this tax planning with me.
Hey, one of the trends that I see is that there's a lot of firms like our firms, Landon, that are basically buying or bringing in accountants to offer tax planning and tax preparation directly to clients, so that they can kind of view it as really full service, and that your investment advisor, financial planner, and tax prepare are all in one company. There's definitely a benefit there.
You mentioned, as you were talking a moment ago, Gerry, about people finding their passion, and that they'll be successful if they actually land on something that they're truly passionate about. At what point in your career were you at, Merrill, UBS, or, Questar now, your current firm that you own? When did you make the shift, and why did you make the shift to business owners and to focus, I won't say exclusively on those folks, but like you diving into that as a specialty for the types of people that you work with? Like, when was that shift made, and what caused it?
Well, it was made kind of mid-career because my partner Richard and I really dealt in the beginning part of our career with senior level executives for deferred compensation plans and saving for retirement and stock options and restricted stock. And ultimately, that's all company reliant. And you work with companies like a Regeneron and Ann Taylor and companies like that over the years, and Burlington Stores. And ultimately, we made the shift at UBS to privately held businesses. And we really realized that they're far more interesting to work with because the puzzles are a lot more fascinating on a family owned business for 4 generations. And the challenge really is much more interesting than talking to a senior executive that has stock options and needs to exercise those and reinvest the money into an asset allocation model. I found the planning side, because I'm a little bit of a planning geek, in that the challenge of figuring out the puzzle for an owner that might be on a second marriage and kids from both marriages, and he's got one daughter in the business, a son that's not in the business, and the business is worth X, and he's got to do his or her estate planning, and maybe they're charitably inclined. And you think about how complicated that puzzle is. I love complicated puzzles. So it's really kind of fun, the challenge to solve that puzzle, work with that client on trying to figure out their goals and objectives, and then coming up with really interesting ideas for them to implement. And the whole exit is basically the elephant in the room, because, I met owners of a company in New Jersey, 2 brothers, 4th generation, great grandfather started it. 2 brothers, one has no kids, one has kids that have no interest in the business, and they're in their late 60s. So I said, look, you guys can't keep kicking the can down the road. You need to really meet and really talk about this. But, that's a puzzle that you need to get the people at the table to talk. But I think to answer your question, I think it's just much more interesting and an interesting challenge to work with these business owners on figuring out an exit and how to manage their assets and how to do their planning and how to reduce taxes and how to do their estate planning and charitable giving goals.
If we were smart, Gerry, I always say I would not have taken the entrepreneur route, right? You would take the retirement market, because it's significantly easier to put together an income distribution plan and say, here's when you turn on Social Security, and here's your asset allocation, and here's the dividend and interest income we're kicking off, and slap them on the ass, say, see you next year, and charge the asset management fee, right? But much like you, that didn't really fill my cup from a challenge standpoint and impact standpoint. So I've definitely, you and I are in the same vein of thinking when it comes to career wise and the path to go down. A lot more pitfalls and problems with business owners and dynamics there than there is somebody just turning the spigot on from an IRA or an old 401k rollover and going, right?
That's true. And I'm very lucky, Landon, that my partner Richard is the brains behind the portfolio management side, of which I'm interested in, but it's not my passion. I'm more passionate about working with the families on solving the financial planning issues and problems. And Richard's passionate about finding the right investment vehicles to match the client needs. And we've always complemented each other, like in skill sets. So I know that in the beginning, right from the beginning, I kind of found the best partner that I could find, and that we work together well. We definitely have our share of disagreements over the years, but we always kind of come to a conclusion that we're both happy with. But I think it's like any partnership. I always kind of believe in this business, like complementary skill sets always work best.
I have two partners that do the exact same thing for me on that side, so
Hmm.
I
Yeah.
can very much relate. I
Yeah.
mean, I think if you try and do it all, you're going to miss stuff, right? I mean, you can't be great at all things. So anybody that
Oh,
thinks that
absolutely.
is crazy. So yeah, I can resonate with that as well.
I have one more question before we start getting into ESOPs, and I'm going to pose it as a selfish question for our listeners, but it's definitely a selfish question for myself. So, for those listening who are in the midst of building a business, and I'm sure, Gerry, on your end, there's things that you've done really well that you would recommend others do, but there's probably things looking back that you think or wish you could have done better. And what I'm getting at is when you're at Merrill, when you're at UBS, and now running your own business, these aren't, you know, cushy organizations where you clock in at 9, you clock out at 5. Like you're working like a dog, you're traveling, you're very busy. So I'm curious to know, just knowing that you're married, you have daughters, what's it like, and how do you suggest people balance or blend their personal life with their business life so that you can show up at home like you've shown up in business?
Well, I mean, everybody has their different philosophies, and getting back to the passion, I love what I do and I love our clients, and we love kind of meeting everyone's needs. And I think it's like you work hard, you play hard, in that you put your time in, and everyone on your team and your company deserves vacations with their family and friends. And I think that ultimately we live by that. We don't limit vacations for our people. And I think that everyone deserves vacations and have your fun and take your time off. So I think it's that balance is really important to achieve. And I think we know our people are always around because we get, as Landon knows, day to day, you'll get client inquiries all hours of the night. And it might be, I need money for this. I'm buying a house. I'm stressed. I need to talk. So all of our people are always great about being available when they need to be available. And I'm more than happy to give as much vacation time as our people want. I think you really need to make sure that everyone has that balance. And I've tried to achieve the same thing because you always feel like in our business, you're always answering emails. Even if you're on vacation, you're kind of looking at your phone here and there, but you do need that time away, and you need to kind of make sure that you're there, and you don't want to burn out. So I think it's important to have both the folks that work on your team and your company not burn out and not be overburdened. And that's where you need to make sure that you have the right people. And I think part of having the right people is compensating them fairly and having some incentives for them, whether it's some sort of equity incentives or just incentives to perform through performance reviews, and make sure everybody's more than fairly compensated. And that we've always believed in that. Finding the right people is not even, though, David, because I mean, over the years, I'm not going to say mistakes, but we've had hiring issues where it's like the people didn't work out. But we're really lucky now. We have a great team now, and it's taken many years to kind of make sure that we have the right team, and we've made our mistakes over the years. But I think finding the right folks for your company is probably the most important thing. And I think balancing work and your home life is really crucial too.
Love it. So
And
getting
having a
into,
kick-ass
oh, go
spouse.
ahead.
I said, and having a kick-ass spouse that understands that from time to time, even if you're at dinner and there's a fire to put out, you're
Well,
gonna
that goes
shoot a
without saying, and
message.
that's a good point because I know when I had my first kid that David's about to have, I remember going through the same conversation. My wife's like, "Should I go back to work and we should get someone for childcare, or do you want me, or should I stay home?" And I said, "Look, I'm going to let you make this decision." But we had just bought our first house. I'm in the training program, and it ultimately, I just said, "Look, I just need 5 hours of sleep, and then I'm good." I go into work. I commute into New York City, an hour and a half each way, and we just decided that she wanted to stay home for a while, and she did for a while, and we just made it work. I don't think we furnished our living room for 3 years, so my friends would come over and make fun of me, but it all worked out in the end.
I
But I
love it.
think no, you're right though. Having the right spouse and is really important in this, and especially the beginning when you're putting in crazy hours for a while.
You mentioned hour and a half to and from New York. That's similar to Landon's commute to and from the grocery store in the middle of nowhere, Nebraska.
It's not that bad. It's not that bad.
Did
By
you
the
say
time you
liquor store or grocery store?
both, well,
Yeah.
I will say, like it's what, like 35 minutes away. Like if you buy ice cream, by the time you get home,
We
it's
got an ice cream
melted.
shop in town now.
Oh, okay, okay, so that changes
Just
things a
opened
little bit.
since you've been here. Yeah.
Maybe
Yeah.
maybe he just brings a cooler
Yeah,
puts in the cooler.
Little Casey's pizza is like 10 minutes away. You're good.
that's funny. So getting into ESOPs, Gerry, that this may be the first time someone listening to this episode has even heard that term before. So let's start off a little rudimentary. What does ESOP stand for? And what is really the purpose of an ESOP for a company?
Yeah, I mean, let's just take a step back. There's really 3 to 4 ways to sell a company, and ESOP's just one of them. And it's basically employee ownership. Your employee ownership's, in you can sell your company to a strategic with it, which is another company in your space that wants to take over your company. You could sell to private equity. I'm sure many of the listeners know private equity is out there with a lot of money in the marketplace, looking to acquire firms and make those firms more profitable and resell them again. Or you can move shares from your privately held company to family members, right? So you can your kids or nephews or nieces want to take over the business, you move shares to them and then they own the company. But employer stock ownership plans are a very unique way that companies can sell yet still keep control of the company, because in private equity you certainly don't control the company, and in a strategic you don't control the company. So you're still controlling the board. You potentially have the ability to move shares to your employees that are hopefully long-term valued employees. They get to retain them. So for for companies that have been around for multi-generations, it's definitely one of the 4 ways to sell your company, but it's a very unique way. And you might say, why is there only 7,000 ESOPs in this country out of all of the small, medium-sized businesses? My take on that is that if I own a cement company and I'm very good at getting new clients, doing my cement work, bringing on new trucks, finding the right workers, getting it all done right, I have a great reputation in the construction business as a cement company, right? But I'm not financially astute, maybe. I just know how to run a cement company and grow it. And I finally get to the age where I really want to start thinking about exiting. I go to my CPA or I go to my lawyer and I say, hey, look, introduce me to a middle market banker because I want to look at exiting. And my theory is that those CPAs and lawyers typically know bankers, and 95% of the investment bankers that cover the middle market don't do ESOPs. They just do strategics and private equity. So me owning the cement company, I never even know what an ESOP is. I never, I get introduced to maybe 2 bankers. They both pitch me. I choose one of them. I sell my company. I do my thing, and I never even know what an ESOP is. So it's a very unique niche, and there's only more than a handful, but there's kind of under 20 real ESOP bankers out there. So it's a small marketplace, but I think it's a great marketplace.
And from my understanding, one of the benefits of an ESOP is that if structured correctly, you can actually sell your business to an ESOP, aka to the employees, is my understanding, without having to pay taxes on that sale. So correct me if I'm wrong, but that's a benefit. After you comment on that, I'm curious to know, because I hate paying taxes already. I can't imagine you're selling a 20, a 50, $100 million business, what that tax bill looks like. What are, outside of like people just not being aware of ESOPs, what are some of the drawbacks to where it may not make sense?
Right.
Complexities. There's a lot of complexities with ESOPs.
It's complexities, and that'll involve the number of people involved. But to answer your first question, it's a unique clause under Section 1042, which is similar. A lot of your listeners might own real estate or commercial real estate. They're probably familiar with Section 1031. 1031 allows you to exchange a piece of real estate and buy another piece of real estate with a large embedded capital gain, and you avoid and defer the capital gains on that real estate transaction. 1042 is the sale of privately held company stock in exchange for qualified replacement property. So you're able to sell as a C Corp, not an S Corp, a C Corp. You're able to sell your shares and elect 1042. So that's part of the services that Questar offers, is helping to implement the 1042 as well as the ESOP transaction for the business owners electing that. And I'd say that it's a strange clause in that people almost think it's too good to be true, that I can sell my company to employees, keep the legacy of my company. I'm not changing the name, not changing anything. I keep control of the company. I can still incent my senior management team and myself to grow past the ESOP transaction. And my employees are going to be ecstatic because they're going to have big fat ESOP accounts if they stay with me for several years. So we had a deal that we did up in Boston called Sullivan Tire and Auto, and everybody in the Boston area knows this company. They went ESOP about a year and a half ago, and I asked Bobby Sullivan in the middle of the ESOP transaction, I was like, so how did you find out about ESOPs? He goes, well, it's a kind of a funny story. I am in Naples on vacation, and I went to a Publix supermarket, and I'm at the deli counter getting roast beef. And I see, and of course, Bobby's telling me I chat with everybody, which, like myself, and Bobby's making small talk with the guy behind the deli counter, and he sees a sign that says we're 100% employee owned. So Bobby basically said to the guy, what does that mean? He goes, what it means is I have $1 million in my ESOP account. He said, what? He goes, I've been getting allocated shares for the 25 years I've been at Publix, and the shares keep going up in value. So not only getting more and more Publix shares in my ESOP account, they're growing in value. So now it's $1 million worth plus my 401k. So when I go to retire, I'll be in good shape. So Bobby basically went back to Boston, called his lawyer and said, find out about this ESOP thing. And next thing you know, he's doing an ESOP.
That's funny. Both,
Which is wild because Publix is actually publicly traded as well, right?
No, they're the largest ESOP in the country.
Ah,
yeah.
that's
So
crazy.
Publix, actually, it's ironic that you bring them up. I have two things. I have a client down here in Florida where they have a whole separate landing page on their website for Publix employees and working with their executives. But it's amazing, like the sandwich maker at the deli counter, $1 million, probably the richest, sandwich maker out there. But both Kennedy's father and stepfather, albeit different locations, work in management at different Publix facilities.
Oh, really?
Yeah, and they always talk about how if I just stay here and do my thing, by the time I'm retired, I'll have X amount of shares, X amount of money, and I'm golden. And like I forget the stat, but it was something crazy, like 1 in 10 or 1 in 7 or something like that in the Central Florida area is employed by Publix or something absurd like that. Because word gets out there. Even her grandparents worked at Publix, and they're the most unassuming millionaires that I've ever come across. They live on farmland, and they shovel shit, and they rake hay, and they raise cattle. But they both worked at Publix in low paying jobs, but high paying incentives.
Well, it's interesting because, like, if you think about if you work for Procter and Gamble or a big publicly held company, it's probably between 3 and 5% at most of the employee base get incentive compensation for stock options or restricted stock. And if you work for an ESOP company, all employees get allocations of stock. Now, they may not be huge allocations because it's a percentage of your payroll, So if you're higher paid, you get more stock allocation, but you still get stock every year allocated to your account. Whereas if you work for, i.e., a Procter and Gamble, you're not going to get stock if you're one of the bottom
Rank and
97% of
file.
this. Yeah, you're just not going
Okay.
to do it. So this is why employee, like a side benefit of ESOPs is that the employee retention is off the charts because it's like you're not
Well,
going to leave, just like what you
that's
just said about Publix.
that's what I was gonna say. I mean, we don't have Publix here, but I got to imagine that if you walk into a Publix, it's probably the best customer service on the planet because every one of those employees know that they've got vested skin in the game. And Jerry, I would argue that one of the best things about an ESOP is the mindset shift that happens among like even your rank and file and your management team and everybody rowing the boat in the same direction because they know that they own this thing, right? So that's in my experience, that's been one of the biggest things that can trend a business upwards even after a sale. Would you agree with that?
I do. I think that's a huge, and it doesn't come across in the benefits usually in the early discussions. It usually comes later, but it is a huge thing because if you're worried about legacy and you want this company to last, and maybe it's a little bit of guilt that your great grandfather started it and you don't want to sell to private equity. There's probably a lot of that going on, right? Because I don't want to be that guy out of
Yeah.
my whole family that sells to private equity and cashes out. So you want the legacy. If legacy is important, you want the company to live on beyond you, right? And that's important to a lot of people. And you want the employees to stay. You want the employees to be happy, and you want the family members to be happy. So it's like it works out in the end. But David, your question on the challenges. So I think as Landon was saying, the complexities of the ESOP, you can argue that it's a lot tougher to get an ESOP done than it is to sell to private equity and get an LOI via email and be done and get a wire transfer and be done with it. But I'll say that if you're passionate about the ESOP structure and everything we just talked about, it's worth it as long as you kind of have a minimum EBITDA to make it work. And I'd say, you might get 5 people like me on a show like this, and you may get 5 slightly different opinions on the minimum level of EBITDA to make it work. But like Landon was saying on the complexities equal professionals involved to get a transaction done. On the sell side, the company is hiring a sell side advisor, ESOP banker, a lawyer, and a valuation firm that's probably part of the sell side banker. On the other side, you're negotiating a purchase price with an independent trustee that we bring in, a lawyer, and a valuation firm. So you got 6 professionals involved. So what happens is it's not like and I think the most important thing is bringing in the A team, being high quality professionals, which really means that it's going to cost you something to get the transaction done with the best professionals in the business. So there's got to be a certain level of minimum EBITDA that I would argue is probably pretty close to 3 million of EBITDA to make the transaction work. It's obviously going to be dependent on what industry you're in, what kind of multiples you're getting, but there's definitely a minimum amount of EBITDA for the transaction to work, and not have the owners say, hey, look, there's so much in fees, this doesn't work, and it's going to stress everybody out. So that's why
Even with the tax savings, you've got to the tax play could be a great thing, but it can cost significantly more to get a transaction done.
yeah, so that's Landon. I would agree that the complexities equal the amount of people to get the transaction done. But I think that what we bring to the table, David, is that we bring in the A team on all these transactions to make sure that it's basically like being the coach of the Yankees, right? I'm a Yankee fan. I'm in charge of getting the best shortstop, best pitching, right? Best catcher. Getting the best players on the field to win is the most important thing you can do.
I do want to go back quickly, Landon, to your comment about with Publix being employee owned, their customer service, is off the charts. Just quick little personal story. When I first came down to Florida, there was a Publix right next to the apartment that I was staying in at the time. And there was this woman, older woman, Maria, who she was like the greeter at the door, just little old lady, just like, hi, how are you? And like over time, we kind of built a relationship. And I knew no one here in Florida, and she would always talk to me, ask how I'm doing, like learned about my background, like actually took a liking to me to the extent that probably a few months after just chit chatting back and forth for the following 2 years until she retired, I bought her flowers every single week because of the impact that she had on me when I first moved down here. She was one of the first people that I showed the engagement ring to before I even proposed. And she was able to retire as a greeter slash bag lady slash cashier slash stock and shelves. And she was able to retire seamlessly because she put in the time and the years into Publix. And now she's chilling, doesn't have any stresses, no financial worries. And even Kennedy's brother, he drives a semi for Publix, and he's already talking about, by the time I'm 50, 55, because he started when he was like 20, he's like, I'm going to have enough shares to where I don't have to work anymore, So people talk about it, people brag about it, and it helps, Gerry. It helps, like what you alluded to, like allow your legacy to live on beyond you because of the impact that you're having on everyone inside that organization. It's pretty powerful.
Yep. I mean, the important thing too is we didn't get into this too much yet, but there's ways to structure these transactions because if the owner's selling his or her shares and they have, this is very common, and Landon, you could probably comment on this as well. Most of these owners have 2, 3, 4, 5 key people that they need to take care of because they're really running the company day to day, a good part of the company, if not all of it. And there's ways to structure this where you can incent the senior executive team that if you're selling a company for $40 million today to an ESOP, from the day it's sold, you can issue stock appreciation rights, which are a fancy term for stock options on the sale price that day, so that those senior executives are incented to grow the company from that point on. 5, 7, 10 years from now, those stock appreciation rights could be worth a fortune to those people. And on top of that, those employees are also getting allocated shares to their ESOP accounts every year. So it's not just the selling shareholder that can really take advantage of possibly a tax-free sale or selling their shares. But typically every conversation I have with the owners is, it's not just me. I want to take care of these key people. And there's even a way that if the owner is going to stay very involved with the company, they can issue themselves warrants as part of this transaction. Warrants take the same role as stock appreciation rights. So if the owner sells for $40 million and then in 8 years the company is valued at $75 million, that owner can also have a value to his warrants from the day he sold to the $75 million valuation and get a second bite at the apple. But I will say the second bite of the apple to most of the owners we talk to is not as important as taking care of those key people. And those key people could be family members, right? So there's ways to do that. And I think that's really important to know that you can incent those folks other than just the allocation of shares, but there's other ways to build in that to the transaction.
Yeah, I think that's a very big thing for people. I would also add that, a lot of people, I think, oh, I'm selling my business. I'm selling all of it. Right. So, Gerry, can you speak a little bit to the fact that, with ESOPs, they don't actually have to sell 100% of the business, right? They can sell a portion of the business to the employees.
That's right. So basically take some chips off the table. So, I know Landon and I, we talked to business owners about their balance sheet when in these initial conversations. We always ask, well, what kind of financial assets do you have already? What's the business worth? What do your liabilities look like? And many times we find that the business is a big portion of their balance sheets. They need to liquefy in some way. So sometimes the business owner is maybe in their 40s or 50s. So to Landon's point, you can do a partial ESOP and you can still elect 1042 and do it tax-free as long as you're selling at least 30% of the company. So we just closed the transaction 2 weeks ago out in California with a trucking company, and 2 owners are in their mid 50s. And they said to us, look, we want to take some chips off the table, but we're in growth mode. So we made basically came to the conclusion that they should sell 40% of the company, which they did. So they end up selling 40, they're holding on to 60%, and they got some cash. And, they sold, and now their employees still get stock allocations and the like.
Are there are there particular industries in which this makes more sense for, or is it fairly industry agnostic?
Good question. So it's industry agnostic, but I will say there's one industry that's literally getting, I'd say, between 50 and 75% of the ESOPs in the current market, and that is construction. And I'm not sure why all of a sudden, because construction's always been a very popular ESOP category, but all of a sudden it seems like construction companies must be the baby boomers, must be just at that right age. But there's not a natural buyer for a construction company. So it's very common that construction companies go ESOPs. And if you look around, there's just many, many ESOPs in existence. And construction companies, like we've talked about, can go out and buy a small construction company. So if I'm a C Corp construction company today and I want to get bigger, I can go out and buy a small construction company, and that owner that's selling to me can elect 1042 on his or her shares. So there's a lot of opportunity in construction, but construction, engineering, architecture are really common themes. But working on farm equipment company, we're working on a family services company that works with autistic children. So there's all kinds of companies that can do ESOPs. There's a hotel up in New England with a lot of real estate and value. They're looking to do an ESOP, but for different reasons.
Well, my theory on the construction industry being one of the biggest ESOP markets currently is got a bunch of good old boys that don't want to pay taxes, and it spread like wildfire after a few of them did it.
Well, it's actually funny you say that. If you say, and Landon, you may agree with this, where do you get your kind of new business opportunities? Believe it or not, it's existing ESOPs. Because what happens is you do an ESOP in the trucking industry, and you have a lot of buddies that own trucking companies that you've met at conferences all over the country. And they're all in the same boat. A lot of them are in the same age bracket. And they all ask each other, what are you doing? What are you doing? And it's like, oh my God, I did this ESOP transaction. Because I have a buddy of mine that's an ESOP advisor, and he does a lot in the food space and in supermarkets. One owner, and now all of a sudden he's got 10 ESOPs in the supermarket space because all those owners keep referring him to other business owners. So once you're kind of in a space, all of a sudden you get in a space. So
yeah, that's a very common theme for sure. I mean, I think you help one person through, let's be honest, what is typically their biggest life moment from a financial standpoint and the biggest complexity that they've worked through. They're all talking to their peers and guys in their study groups or just buddies that are in similar situations to them, and the dominoes start falling, right? If you're able to make it a pretty seamless process for them and you put some money in their pocket, they've got no reason not to say good things and be happy.
no, you're absolutely right, Landon, because I mean, you're really helping them through what they know is the biggest, most important transaction probably of their life. And the reason people procrastinate is because they know it's the biggest transaction and they're worried about what they're going to do once they sell the company. So there's all these things that go through someone's head. But if you handhold them through this transaction and it gets done right, like I said right in the beginning, getting the A team involved so you know that it's going to get done right, they're friends for life.
Yeah, I would say the other thing real quick. So people listening might say, well, why the hell wouldn't you do an ESOP, right? It sounds great. And like I said, we've covered some of the complexities of it, et cetera. The other thing that I have found for me to be a bit of a roadblock when I'm kind of advising on options for an exit is the strategic buyer, right? And this is where I think, Gerry, you and I have to do a good job as far as getting on the emotions and goals of the client side of things. Because if someone's got the ability to go to a strategic buyer, the downside with an ESOP is it's got to be a fair market value, right? The transaction has to be at a fair market value. Um, so you're not ever going to get to that point where you're getting a 10 to 15 multiple, like you could with a strategic buyer. Um, but I think the other thing that you said about, caring about legacy and the hands that the company ultimately ends up in, if you've got somebody that cares about the company that they have built, I personally don't think there's a better way to transact or leave your business than an ESOP if you truly care about your people and appreciate the people who've gotten you there. Would
Yeah,
you
and
would
I
you agree
think
with
that's
that?
probably at least a third of the companies. But I think the sin of it all, Landon, is that I think those companies, when they go to exit, they don't explore the ESOP option for a variety of reasons, like we talked about earlier. And I think, I'm always a big believer is there's no rush to make a decision. Look at all your options, evaluate your options, and then make a good decision. And there's no rush, typically. But
Couldn't agree
in
more.
the investment banking business, we'll work with an investment banker that does all three, which is rare actually. There's one in the construction, industry really that focuses on construction that does both ESOP or does all three ESOPs, strategics, and private equity. And I sometimes think that's the best route if the owner honestly doesn't know which route to go in. And you look at all three from an after-tax perspective, and then you weigh the soft issues like we are talking about, and then you make a decision.
Yep. That's what a good advisor does anyways, right? Lay out all the options and let them make the decision from there.
That's right.
Because it's going to be painful no matter what. I mean, it's going to cost you no matter what. So yeah, my
Agreed.
2 cents.
Well, Gerry, this has been great. And as we start wrapping up here, one of the questions that we ask all of our guests is a book that's had an impact on them, be it recently or a while back. Is there a book that you have in mind that has had an impact on you lately?
Well, I'd say a while ago I read Stephen Jobs' biography, and I was fascinated with how he grew Apple from the beginning and what a great entrepreneur he was, and fascinating individual. So I found his journey very, very interesting.
Yeah, I think I remember reading something about him where, he had a bunch of the same pair of jeans, a bunch of the same pair of shirts, just one
He
less
was a weird
decision.
cat.
Yeah, just one less
Yeah.
decision that he has to make every single day in terms of, what he wears. So when my wife busts my chops about wearing the same thing all the time, I'm like, well, Steve Jobs did it. Just stick around, babe. We'll get there. Don't worry. I just got to keep wearing this. um, but Gerry, also at the time of this recording, you're about 2 weeks out from releasing something that you've been working very hard on, and by the time people are listening to this episode, it will be live. Talk to us about you got a podcast launching. Talk to
I
us
do.
about why some of our listeners should go and give a listen to yours.
Can't bust
Right.
his balls about being the old guy anymore when he's doing pods. Come on.
Yeah. Hey, who's old? Who's old? And, now we're doing something called buyouts, business, and bourbon. And I have a soft spot for bourbon, as you know, David. And so I thought I wanted to include that and make it a little bit on a lighter note. But I wanted to talk about buyouts as part of this whole exit planning, and baby boomers needing to think about these issues. And I know there's plenty of podcasts already on M&A activity and things like that. But I thought we'd try to find some interesting guests to talk about succession planning and how important it is to find the future leaders of companies and ESOPs themselves and the whole M&A market and construction. We have somebody talking about, and we have an NFL player that leads a defense. So we have some kind of really fascinating guests, and also somebody from the military as well that was a leader in the military. So, finding leadership in companies in the succession planning, as well as the exit strategies we're going to delve into and hopefully have some fun and sip a little bourbon, and hopefully it'll be interesting.
Yeah, it will be. I've listened to some of the recordings before. Of course, they've gone live, and you got some heavy hitter guests right out of the gate. So I'm excited and would encourage everyone listening to our podcast to go and give Gerry's a listen as well. Also, if you're interested in connecting with Gerry personally, you can find him on LinkedIn. It's Gerry with a G, Gerry Spitzer, Spitzer. He also does a wonderful job posting very valuable content for business owners and information around exit planning as well. So just by being connected, you'll see a bunch of good content from him on there. And then his website, if you are a business owner and you would like to learn more about an ESOP and if that could make sense for your business, please go to questarcap.com. That's questarcap.com. With that said, Gerry, we appreciate your time today. It's good to get out of our normal cadence of meetings and just shoot the breeze and have fun on the pod together. I'm glad you and Landon had an opportunity to meet, but we really appreciate you joining today.
Thank you very much for having me. I really enjoyed it.
Yeah, Gerry, this was great.
Thanks, Landon. Thanks, David. Yep.
Awesome. And for everyone tuning in, we appreciate your time and attention, and we'll catch you on the next episode.
Whoa. Who knew I would make it this far? They hated, they never believe me. Yeah, I would never drop the ball. I know I make it look easy. Yeah, Mayweather with the defense. I don't care what a critic got to say. I got them picking up the pieces. That to me, you really playing with your life. I'm about to